And welcome to a new week on Crypt. Oh my God. Today I present to you a tale of two ICOs. What's nice is to see that ICOs are back. However, how performant they are is going to be on the team. Let's dive in. Now, what occurred over the past week is likely a very good marketing point for Ethereum versus Solana in this case. I think one of Ethereum's biggest fails in terms of the marketing camp, or really the new user experience, is their approval before you actually sign any sort of transaction. If you come onto Phantom first, i.e. Solana, you would just be used to clicking once and signing a transaction. Ethereum doesn't have that. However, there's a lot of reasons that extend beyond this as to why you might prefer Ethereum over Solana and the EVM. What we are seeing here are two ICOs, one on the Solana network, one on the Ethereum, and they had two very different outcomes. Our first example comes to us in the form of Humidify. What this is an AMM, an automated market maker on Solana. So think of this as like a Uniswap that permits and facilitates swaps between one asset and another. Now, what separates an AMM from a centralized exchange is that any user can provide liquidity, whether that be stable coins or the wet token on either side. This obviously extends to any token, right? It's probably going to be wet/WIF/Farcoin, right? Same with stable coins. But basically, users can come in and they can create the liquidity that generally a centralized exchange would have themselves. Now, a centralized exchange takes those fees and they keep it, that fee on the buy side and on the sell side. And AMM, conversely, gives those liquidity providers that fee. So the idea is that it's very automated. Anyone can throw their cash in and they can build strategies around it. They also allow assets to go live and sort of list themselves and build their own liquidity. So why Humidify ran this on Jupiter versus their own platform is a little bit beyond me, but Jupiter does have a very good reputation. Now, what happened coming from Humidify, some real dry shit happened today. And props on keeping the voice of the platform. Humidify started 6 months ago from nothing, straight from the trenches of DeFi 1.0. In those 6 months for Sol USD, we started quoting tighter and doing more volume than Binance. Now, this is quite impressive. Sol USD, that's a big trading pair. And to beat Binance, thumbs up, kudos. That's a lot of volume. We did not kiss any ass or bend the knee to anyone. We started DeFi 2.0 with the vision of bringing liquidity to the people. The public sale today only brought liquidity to one sniper. Fuck that guy. Humidify will never turn its back on the trenches. So here's what happened. They set up thousands of wallets, each having about 1,000 USDC. For each wallet, there was an instruction creator that triggered the deposit of the funds to the DTF smart contract. This is like a button that says put $1,000 into DTF to buy wet. Then the transaction was made that pressed 6 of these buttons at the same time. Per bundle sent, a lot of bundles were sent, 4 transactions were executed, 4 transactions that triggered 6 instructions each for a total of $24,000 USDC or 350,000 wet for each bundle. So what's going to happen in the water world? And they go on to say, we are creating a new token. All wetlist and jupe stake buyers will receive a pro-rata airdrop. The sniper is not getting shit. Fuck that guy. We will do a new public sale on Monday. And this isn't the first time this has happened. ICOs have been going on for a very long time and trying to beat the DDoSing, the Sybil resistance. I mean, this is really why Monad was very successful in going to Coinbase. Coinbase was able to keep that deal open for a very long time. It kind of had limited information and transparency on exactly how the bids and the asks were going, but it did make it very easy where some sort of sniper couldn't come in and get everything. And let's remember the Libra scandal with Javier Milei and a lot of the Trump and Melania problems have been around these snipers, these people that use bots to get in very early on a coin's release. Here we have from Bubble Maps, breaking, we found the identity of the wet sniper. Ramar XYZ claimed 70% of the Humidify presale using 1,000 plus wallets, then dared to ask for a refund. So this is where, again, going through a Coinbase would not get you this kind of auditable material. And Bubble Maps is great for looking at on-chain. So Humidify is a major AMM on Solana. They recently launched their wet presale on Jupiter. It sold out in just 2 seconds, but quickly turned chaotic. Reports confirmed that the presale was Sybiled. Humidify acknowledged that a bot farm sniped the sale. We calculated that at least 1,100 out of the 1,530 addresses came from one entity. Hot damn. The sniper covered his tracks by funding thousands of fresh wallets from exchanges. Each received exactly 1,000 USDC before the presale. And we can see these clusters that Humidify talked about, right? Each of these are wallets receiving $1,000 in funding, ready to launch into that sale. And they all follow the same pattern. It's a fresh wallet. It's funded from an exchange. It's used to snipe the presale. Now, funding from an exchange means it's not attached to a wallet or an ID, except one of them slipped up. It was funded by a private wallet, not the exchange. This private wallet 54 547 WWC, then received $150,000 from another wallet also funded by the same 547 WWC. That wallet is linked to a Twitter handle. So this, again, guys, is why committing crime on blockchain cannot be a great idea. And when people tell you otherwise, you really gotta take into question their understanding of, can they read the block explorer? Because there is a lot of data out here, and one little slip can connect you to an identity, as has happened before. Anyway, pure comedy gold. So Humidify did cancel the sniper's allocation, and real pre-sale participants will receive a pro-rata airdrop. Now, because of this was about Friday, so they announced a new sale going live today on Monday, with Jupiter Exchange, the launch partner, coming out and saying, hey, relaunch of the public sale phase for WET goes live in 5 hours, giving you a heads up, right? Mark the time, the 8th of December, 10 a.m. Eastern time. Great. Set your alarms, set your calendars, get all of those pings that you can. What's really funny here is it didn't go as planned. And I've actually run a launchpad before. There are technical issues. There can be everything from getting a signature on a legal doc that you need before this thing goes live, which, believe it or not, is more common than you might believe, or some technical components like having the tokens ready to launch, making sure that everything's in its right place and just ready to go. So Toby sums up what ends up happening this morning. Be Jupiter Exchange. Launch wet sale. Launch on Friday. Sale gets botted as fuck. Scrap and refund it. Relaunch on Monday. Announce anti-bot sale. Time. They delayed for 10 minutes. Understandable. They delayed another 20 minutes. They delayed another 30. Maybe they should have just gone for 2 hours straight out of the gate. And then here's where it gets problematic. Surprise, motherfuckers. The sale opens 20 minutes earlier. So for this total of 1 hour, I mean, people are looking at this. You cannot set an expectation and then break that setting. That is happiness. Happiness is expectation management. So all hail the anti-bot system, and second sale of this wet asset is a total fail. And what do we see now here in this transaction? Coming from Emon, he just shows a simple block explorer putting out a botted system sniping $500 a pop, right? Generally, in a public sale, you would never see things being this consistent, this straightforward. It shows that it's a bot, that it's been automated. Now, don't get me wrong. I am super pumped for the ICOs. They are one of the capital formation, really killer products that we have created here in crypto land. You can't do this kind of thing in traditional finance. Going through an IPO process is rigid, it's excessive, and this is really a way for software to bootstrap itself. A lot of times a token is necessary to a decentralized ecosystem. Now, if it's not, don't buy that token. But if it is, you need to launch it in order for the network to go live. You simply can't go live without a sale. So it's a little bit inverted, right? And because of this, you're actually taking on a buttload of debt. You want to make sure that all of that capital that you got from the token sale, that usually goes to the developing team or to the longevity of the protocol, that gets put to use to make sure that the price accrues. If you've oversold the token sale, because again, that's the beginning of your bootstrapping phase, and then you don't deliver afterwards, you get this down and to the right, which has proven to be unhealthy. This is where we went when we went into private investments, venture capital, and really away from the ICO model. So now that people are doing ICOs, now that Monad's done it on Coinbase, there's a slew of decentralized platforms releasing different versions of launchpads, if you will. And Aztec comes out. I spoke about this last week. Aztec is an amazing privacy solution on top of Ethereum. And they went and they concluded a very successful and shining ICO on the blockchain itself. So not using Coinbase, they actually used a new product coming out of Uniswap. Aztec announces, thank you for showing up for privacy. 19,476 Ethereum committed, 16,741 participants. The participant number is honestly as important, if not more, than the capital raised. We want to see this money going to we want to see these tokens going to as many people as possible. 50% of the capital committed has come from the Aztec community. Dope. That means they're tracking wallets that they've incentivized previously in their Discord, and they have some mechanic for understanding who's who. We're building the next renaissance together, next steps for the holders. So this is really cool because this is what I like to see. This is what I came here for. But what I really love here, step 3, token generation event, is triggered by an on-chain governance vote, which can happen as early as February 11th, 2026 at TGE, which means People must vote for this unlock, and why would they not, right? They want these tokens. 100% of the tokens from the token sale will be transferable. Only token sale participants and Genesis sequencers, people who ran sequencers to help bootstrap the actual tech, can participate in the TGE vote. So only people that will be receiving these tokens can participate in this vote, and that means it's very likely that it will go through. Why would you hold a token and reject the opportunity to have it sent to your wallet? So this is really cool. They have a voting process. This is how I think it should work. This is what should be enshrined in regulation to say this is how we ensure decentralization. Now, Hayden Adams, the CEO of Uniswap, he comes out and talks about it. And he says, look, the first CCA auction is complete. And he's talking about these things, continuous clearing auctions, which I'll come back to. It's a new product from Uniswap. And he said it was done and it was beautiful. A total inverse of what we saw on Jupiter. $59 million in bids, no sniping, bundling, timing games, just slow, fair price discovery, ending 59% above the floor. That's pretty nice, with literally days to bid earlier and get an average bid price. Even if you bid $10 billion FDV on the first day, you would not have overpaid and instead executed a dollar cost average price between the floor and the clearing. So this is really cool. Here we have the beautiful bids, right? 19,000 ETH, about 59 million. With a clearing price almost 60% above the floor, fully diluted valuation at current price, 479 million, token sold 866. What I really do like is this fully diluted valuation is happening via an auction mechanic. So this is being seen block by block, or really epoch by epoch, however they choose to break these terms down. But this price is being set by the market, not by the previous rounds of private investors. And obviously we can see this is nowhere near the $1 billion FDV that has become so common. They've been going above $1 billion, and that's why we've seen down and to the right. So if you believe in Aztec, this is a cool opportunity. Now, I did like this back and forth. We had David Hoffman of Bankless come out and say, what's the logic for how the price of Aztec increments upward during the sale? Like, as bids come in, does it increase the price of the Aztec sold? Is that correct? Like, how do we look at this? And Hayden comes out and he says, think of it this way. Every continuous clearing auction bid is split across all blocks of a remaining auction. So let's say we take 4 days, and an Ethereum block is like once every 10 minutes. It will be consistent. This is no Monday to Friday. This is no banking hours. This is block by block price discovery. So the price stays at the floor until there is enough demand to buy out the entire auction at the floor. Pretty cool. The team sets what is the floor, what's the minimum amount of money we want to raise. The price stays there until there's clearly enough demand to start moving the 100% of the auction up. At that point, every bid above the floor pushes the clearing price up. We start to go above that floor price. Again, spread across all remaining blocks. There is enough demand to buy out the rest of the auction at this higher price, so it's simply supply and demand. Super cool. And this is where it gets really groovy. We have the continuous clearing auctions, new standard for bootstrapping liquidity. In my opinion, these auction models are amazing. We found consistently that some of the best ways to prevent market manipulations is by putting in even more markets. I know it's crazy, but that's what's happening now. Each block the program is looking at, can I sell out the entire floor at the price it's looking at? And if there's more money, let me start to increase that floor. So you've got customizable parameters where you can define the supply, the duration, whatever you want when you're launching a token. Fully on-chain and transparent. That's how we can track these people when there are snipers and say, hey, maybe we do need to pull this back. Maybe we do need to cut out a certain amount of deliveries because those people gamed the system. They're not the community and the purchasers we want to reward. Market-driven pricing. And you can see here, block by block, as the price goes up, thus the floor lifts. Liquidity from day one, this is pretty cool, is that you uncover fair market value and seed a Uniswap v4 pool, driving liquidity to support active trading from the start. This means that once that price is discovered at the conclusion of the auction, you immediately wind up with a pool on Uniswap that is 1/2 your tokens, 1/2 stablecoin supplies. That means people can immediately start buying and selling and trading these assets. This is the way I want to see these decentralized systems launch. There should be no going to the exchanges like Binance. There should be no paying a fee for them to launch into your audience, having to give them millions of dollars worth of tokens to distribute to their audience, because Binance just cares that Binance users win. They don't really care about the community and the long-term impact of these ecosystems. So there is a lot of extraction in a general TGE. This not only doesn't not extract, it kind of guarantees that you get your floor met or you don't do the token sale at all, which is excellent. It handles the distribution automatically, and it sets up a fully liquid market right out of the gate. And they've done a great job on the education. You can see if price is under $100, I'll spend up to $120, right? You can program this in. The price discovery happens over time. and it automates this entire process. I think everything here is very clear. If you do want to hop in to learn more, as always, this page is in my sources in the description, and we can see block by block how price discovery begins to happen and how more bidders at a higher price begins to push everything up. Now, of course, they do settle on a price at the end. Everybody's funds are collected and they distribute across that unified price. But this is really cool, really effective, and really smooth. So with that being said, I am so excited about the return of the ICOs. We got into numerous structurally deficient problems by moving away from the ICO model. We got to value extraction from the centralized exchanges. We got to overselling the lock supply to private investors, to venture capitalists, and taking away the opportunity to grow that capital together, right? VCs buy cheap and then they sell when it goes live. This time, the average person, the retail investor, anyone who's interested in the projects themselves has the opportunity to participate, to grow wealth, and to effectively grow alongside the platform. So this is how we create Lindy, robust, anti-fragile, decentralized platforms. And this is also how we comply with regulations and create the new markets for a new world for launching software-based networks. It's super cool, it's super exciting, and major congrats to Aztec for setting a gold standard. Let's follow that more, and may it be a boon for the Ethereum camp in this Ethereum versus Solana battle. With that being said, I'll see you tomorrow. Don't over-lever, stay safe. Give me a like and a follow because it means a lot to me, and have a great day.